Welcome back to Trading with CJ. Now I have another one for you today in my Investing for Beginners series, and we're going to be going through some different stock order types. Now what I mean by stock order types is, well, first off, you need an investment platform. So there are so many different platforms out there. If you're in the UK, some popular ones are Trading 212 or FreeTrade, and if you're in the US, some popular ones are Robinhood or M1 Finance. But there are different platforms all over the world, so be sure to just check some different ones out. Now once you have your platform, you don't necessarily need to go into that live every single time and physically or manually buy that stock. You can set different parameters of what prices you want to buy or sell at, etc. And that's where these different stock order types will come into play. Once you have your parameters set, the platform can then carry these orders out for you. So we're going to be covering some of the main stock order types in this video. Pretty much every single investor would have used at least one of these order types before in order to invest into the stock market. Now this is a perfect time to say that I'm not a financial advisor, and any stocks purchased in this video are purely for examples. They're not necessarily recommendations. And if you are planning on investing, you should always do your own research first. And as always, if you find this video useful or interesting, please hit the like and subscribe to my channel. So let's get into it. I'm going to be using Trading 212 here to show you through these different stock order types. As I say, there are so many different platforms out there. This is just the one I'm using for this, and I'm using Coca-Cola as an example. So Coca-Cola is a US stock, and the market at time of recording is currently open. So if I wanted to buy a share of Coca-Cola, I could go on buy, and then it comes up with some different order types. Like I say, this is 212's order types, but they are the same on every single investment platform out there. Now, the most common type is a market order. And a market order is basically the simplest way of buying or selling a stock. So on the market order, you can type in how many shares you want to buy. So if I wanted to buy one share of Coca-Cola, I will literally press 1. It would convert the US current exchange rate to pounds, as I'm in the UK. And then I could press review order. It's going to tell me there my order type is a market buy, the cost in pounds, and it's going to be free to buy. And if I send this buy order, this should buy that stock immediately or near enough. So it's obviously going through at the moment. It goes down onto pending orders there, and it says there one buy market. Now in a minute that will come through as a buy. So there we go. You can see now it come up order executed, one Coca-Cola, and it tells me the price I bought it at. You can see it pretty much filed immediately. Sometimes it takes a little bit longer, sometimes, within 5 minutes or so, but generally it will buy straight away. Now that is only if the market is open. Obviously each market, UK has different opening times, so does the US. So if the market isn't open, then it will not fill that immediately, and it will go into pending order and remain pending until the market opens again. If I opened this tomorrow and I placed a pending order at that price, and for some reason this stock shot up 10% or something, I could be buying it at a much higher price, and I won't even be able to do anything about it because my order would already be placed. So that's one of the downsides. If you fill in an order whilst the market is closed, anything can happen when it reopens. Obviously it really depends on the stocks you're buying. With Coke, they are they're a fairly stable company, so I shouldn't expect a 10% rise. However, there are a lot more volatile stocks out there. Take penny stocks, for example. If you're buying into a penny stock, anything can happen overnight. So if you did place a market order whilst it was closed, then anything can happen, and that could be a complete different price in the morning. So that's one of the downsides to market orders, but the great thing is it is pretty much filled immediately, and it's the same way for selling it. If I wanted to sell that share, I will literally press review order there, and it will sell it straight away. Now another order type that you can place when buying a stock is a limit order. So let's just say you wanted to buy one share in this company again, and you want to place a limit order. So with this, you're telling the brokerage the maximum price that you are willing to pay per share. So let's say that I want to buy this, but I only want to buy it if it hits $46. Okay, I don't want to pay 47, I want to pay 46. So I could put in here $46, and I can press review order. Now it's going to come up there. It's a limit buy now, one share, $46, and I could send the buy order. So now you'll see here it comes up pending orders limit. Now that's not going to execute unless it hits $46. If that hits $46, then that order type will now execute and I will then own another share of this company. But if it doesn't hit, this is a downside to it, then you'll never be able to buy this company. So I could put this limit order here, you forget about it, come back in months time, Coca-Cola has shot up to $60 per share. My limit order is basically pointless because it's not going to hit 46, well, unless something drastic happens. So I could just forget about that. So that's the downside, really. With limit order, it will not actually execute your order until it hits that price. And if we go on to another order type here, so let's go on a buy again, and you can even set this high if you wanted to. Let's say that the market was closed and you wanted to make sure that you only paid a certain price. Like I said about market order types, it will just shoot up and you may end up paying a ridiculously high price. So let's say the market was closed right now and I wanted to buy a share, but I only wanted to buy one for $50 maximum. So I could set that, review my order and send that. I'm not going to do that because the market is open at the moment, so it's just going to buy my share immediately because as you can see it's not currently at $50 per share. So but if the market was closed, then it would execute that up until $50 per share. One last thing to point out on this, you can see here it says expiration. So the one I just sent, that limit order, it would only expire at the end of the day. And you don't really want to have to keep going on every single day, replacing your orders, because that could be long. There is two different options here. You've got GTC as well. So if I sent out GTC, that stands for good to continue, which means it will keep that market order on there. That order will be placed into pending until you physically go in and cancel it, okay? So that's just worth bearing in mind. You want to make sure you haven't put some ridiculous one on there. Something happens to the stock and then it ends up randomly buying it for you. Okay, you don't want that. So just keep an eye on that. You know, you can do end of day or GTC. Now, another buying option is a stop limit here. You want the stop limit to basically, it gives you double security here. So let's say that you were happy to buy this stock at let's say you wanted to buy it at $45. That is the maximum price you wanted to pay, $45. So if it dropped to 45, you would buy it. So you can put in 45 here as your maximum. Okay, but you want to actually stop it a bit earlier than that, just to make sure that it doesn't shoot through the threshold, because like I just said, some stocks can be very volatile. So you could put an order in now and obviously the market is constantly changing, and by the time that market has started placing that order for you, it could have shot up another 2, 3, 10% some stocks. It depends how volatile they are. It literally takes seconds for stocks to shoot around. So let's say the most you wanted to pay was $45 for this share. You could then send a stop price on this at $45.50. So if this hit $45.50, it's now going to stop it and place it into a limit order, which means it's now going to start executing your order. So if that hit $45.50, it's going to execute your order, and you're basically saying to the platform that you want this to get you no less than $45 per share, okay? So it's going to get you anywhere now in between $45.50 and $45 per share. So I hope that makes sense. Basically, what it's doing is it's giving you double security here, because you don't want to just have the 45 and then it shoots through that and you end up paying something else for it. So with this, you're saying stop it at 45.50, but the most that you are willing to pay is 45. So they're your different really buy order types. Now it's very similar for selling a share. If you wanted to sell a share here, it's the same thing here. Market order, which as we said, it will execute and fill it pretty much immediately as long as the market is open. And it's just going to try and get you the current price for it. So even if it was closed, and like I said, the same thing with pending orders, as soon as the market open again, it's just going to execute that buy. But you can set a few different orders here to protect some losses. So let's say you wanted to do a limit order here for this. You wanted to sell one share of Coca-Cola, but you are only willing to sell it for $49. So you don't want to have to keep going onto this platform every single day to potentially see if it's gone up to $49 to sell it yet. You can just tell the platform, I want to sell this when it gets to $49. I want this to just carry on until I tell you otherwise. Put the sell order in and review my order. Now, when it hits $49, this is now going to sell my share. You could also do a stop order. So if I wanted to sell a share, if it hits a certain amount, then I will definitely get out of it. I want to take my profits. So let's pretend that I want to take my profits on this company if it hits $46 or less, okay? I don't really want to sell it, but if it does drop to $46, then I will sell and take my profits. So I can put in $46 there, good to continue, and then I can review my order. So this is a stop order. What you're doing is you're basically saying, I want to sell my shares here at $46. I'm going to review my order. I now have two orders placed, a stop order and a limit order. The limit order is going to sell it if it hits a certain price above my current price, and my stop order is going to sell it if it hits 46. So if it's anywhere between that price, it's going to sell. You of course don't need to do this. Say I didn't want to sell it, I wanted to cancel my limit order. Now I just have the stop order, $46. Now the downside to just having this stop order is, once again, in a fast moving market, if you was to hit the $46 mark and then it didn't execute in time, it could then sell for even less or even more. So that's when you can place a stop loss. Now a stop loss is very common, or a stop limit. If you wanted to do a stop limit here, you can choose how many. So say you had 2 shares, you could sell all, or you could just sell 1. So let's say I wanted to sell 1 share. So if I wanted to sell my share of Coca-Cola, let's say I wanted to accept $50 for it at the very most. Okay, I'm not willing to sell this. If it doesn't hit 50, I will hold on to it. So I will set $50 as my limit price. And I'm happy to stop this as at 50-50. So if it gets to $50.50, it will now activate a stop order and it will start to sell my share. And then it has a 50 cents leeway to hit the limit price. You could do this a lot more. You could even do, if it hit 52, it will take, now basically it's going to take anywhere between 52 and 50. So I can review this and send my sell order. So now if Coca-Cola gets up to $52, we'll cancel this one from earlier. If it gets up to $52, it will activate a sell and it will try to sell anywhere between $52 and $50 for me. And the same again for if you didn't want to take any less than $45 for this, I could put in 1 share here. And my very, very minimum I was willing to take was $45. $45, and I wanted this to execute when it hit $46. So if this drops to $46, it's now going to begin to sell my shares, and the very least it will sell for is 45. So let's say that you bought this at 40 and you wanted to secure some profits, you could do this. So it's a great way of just making sure that if anything does happen, there's a crash or something happens to this stock, that you are going to try and secure some of these profits. There's one last thing to notice actually, that's called a price alert. So in this top corner here, you can set a price alert for a company. So let's say I didn't want to place an order, I wasn't sure if I wanted to buy it. I like the look of the company and I may well consider buying, but I don't know if I want to physically go and place an order. So if you didn't want it to necessarily do that, you could just set the price alert. So if it hits $50, or actually let's go for less, say this drops down actually to $40. It's probably not going to happen, but you never know. Let's say it drops to $40, I can set this price alert. So if this drops to $40, I will now got a notification on my phone and I can now decide, it says the price alert, whether I want to buy at this price or not. Those are the different order types really, and basically the reason for it is it just secures you, it gives you a bit more stability. You haven't got to keep going into platform every day and checking out what you've placed orders on, etc. It's worth remembering though that if you've placed orders to just continue on and on, that if something happens to that company or fundamentals change or there's a crash, it could still activate those orders. So just worth noting to keep track of the orders that you have on these companies. So that's just some of the main different stock order types that you can use when investing. And as you can see, there is benefits and reasons to using each one. And like I said, the main stock order type everyone uses is market order. Personally, I really only use market order, although occasionally I use a stop loss just to protect some of my profits, as well as setting price alerts just to notify me when they hit those certain prices. Now the app I used in this video was Trading 212. If you want to use Trading 212 as well, I will leave a referral link in the description below. If you use that link, then you'll get a free share worth up to £100 when you sign up and deposit £1. And just for transparency, I would get one as well. It's a really easy app to use, but there are lots of other apps, so feel free to check some of those out. If you do want to use 212, I have done a review on them. I'll leave that in the link in the description below as well, so feel free to check that out. As always, if you can hit a like and subscribe to my channel, that is greatly appreciated. Also, let me know in the comments below some of your favourite stock order types. Do you set any of these? If so, which ones? Thanks for watching, and until next time.